So the word Fibonacci has its own origin and mathematical explanation of what it represents. I'll put a link to one of the videos on YouTube with a simple mathematical explanation and simple explanation on how we can be able to see Fibonacci in nature and how it's been applied over the ages. But for this video, I'm going to just show you the simplest way you can use Fibonacci in your trading strategy or your trading style to be able to execute trades and increase your execution, your percentage rate of execution, so that you can be able to win more trades in your forex journey. First of all, Fibonacci, I see or I use Fibonacci as a tool in my trading. And how you can get Fibonacci, I'm using TradingView. I'll put a link in the description for TradingView. This tool, TradingView, so that I can be able to see charts of what's happening in the forex market and different commodities available in the financial market. How to get Fibonacci? You come to this icon and click on Fibonacci retracement. So I can be able to draw a Fibonacci at any point from one point to another. But before you actually get to use Fibonacci, you have to have the right settings on your chart so that you can be able to execute it from whatever you see. Now, just for this video, I'm going to show you the kind of style I use for my Fibonacci and the kind of values I use in my Fibonacci to notice retracements and pullbacks. So you can take a screenshot or look at these values. I'll explain them to you and how I use them so that when you understand them, you can be able to execute on them too later on. I use 0.382, 0.618 as my retracement areas, and I use this color because I design my Fibonacci according to the kind of background pattern I have on my chart so that I can be able to see it properly and more defined. So you can take a screenshot so that you can be able to use it in your trading or be able to understand what I'm going to talk about. So I'll give you a very simple example on how Fibonacci is used in the financial market. Number one, Fibonacci is usually used in a trending market. By trending market, in the previous videos I showed you the kinds of movements we can see in the market, either a downtrend or an uptrend or consolidation. So let's say we have an uptrend. We have our high, we have our low. Then we have a higher high, we have a higher low. Then we have a higher high. So for a trader like me who wants to execute on such a trade, I want to make a buy entry during an uptrend. First, I'm going to draw my Fibonacci starting from point A to point B, from this point, from this higher low to this higher high. So according to my Fibonacci, I'm having three levels of retracement I'm looking at. I have 38.2, 50, and 61.8, right? So let me draw a simple line to represent a retracement level in Fibonacci, right? Let me say this is my 31.8. Now let me say this is my 38.2. This is my 50% retracement level for Fibonacci, and this is my 61.8 for my retracement in the Fibonacci. So after drawing this as a forex trader, I'm going to these levels are going to show me where price is going to actually come back and retest before it actually continues to go upwards. So as I said before, this is going to be wait a minute. As I said before, this is going to represent our 38.2 retracement level. This is going to represent our 50%. retracement level, and this is going to represent our 61.8. Yeah, 61.8 retracement level, right? So let's imagine, actually, let's not imagine. Let me say you are on the charts, right? These are your retracement levels you have on your Fibonacci listed out. Number one, remember this is a Fibonacci retracement. By retracement, that means the market is going to come back. It's going to come back down. Let's say we are in an uptrend. The market is going to come back down to retrace at one of these levels, then to go up, go back up, or continue its upward trend. This is just a retracement, just shows where price is going to retrace, then continue on an upward momentum. So let's say our price is going to come back and retest at either the 38.2, 50%, or 61.8. Now, one thing you have to consider is most traders do not use Fibonacci as the only way you can execute trades in the market. There are other factors involved in this, like support and resistant areas. And for people who use indicators, they can build the moving averages. But now I'm going to specify on the Fibonacci. So let's say price is going to retrace at 38.2 or 50%, right? Let me put it at 50%. Price retraces at 50%. That means after a retracement, what happens in the market? The 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 trend continues to go in the upward direction. Remember, this is a retracement level. And for a Fibonacci retracement, from the values I showed you before, now, like in just this scenario, we are having a downward momentum, price retracing the 50% level. But then we have, since this is a retracement, we have areas in the market. Fibonacci is going to show us where price is likely to come back to, or to continue to the downtrend, so that you can be able to decide where you're going to put your take profit. So price actually retested and it came back to this level of 27%, negative 27%. So this can be someone's first take profit, and this can be someone's second take profit at negative 61.8. So this is an example of a Fibonacci retracement on an uptrend. And as I've told you before, price will always, according to Fibonacci retracement, it will give you levels where you can take your take profits, where the price is expected to actually continue. So according to Fibonacci, this can be our first take profit, this can be our second take profit. So let me give the same example in a downtrend. So let's say we have a trending market, but this is actually in the downtrend, right? Remember, Fibonacci is being used during trending markets, not during consolidation. It's a retracement in a trending market. So let's say this is our lower high, lower low pattern being formed. So price is at this point. So let me say I'm going to draw my Fibonacci starting from this point, from the previous higher lower high to the next lower low that has been formed in the market. Remember, this is a downtrend, right? Now, as I said before, our Fibonacci is going to have three lines of retracement in the market. I'm going to have my first line, the 38.2 area, the 50% area, and the 61.8 area as our retracement point, where we expect money to actually go back down to continue on the downtrend, because this is a downtrend, right? So I'll draw this I'll put the text for proper illustration. This is 38.2. Try and do this real quick. That 8.2%. This is our 50% retracement area, and this is our 61.8 retracement area, right? And remember, when you draw Fibonacci, it will indicate areas where price is potentially supposed to come back down on a downtrend. So this can be our first take profit. This can be our second take profit. So we are expecting price to retrace back, or to should I s- we can someone can say to get rest before it actually continues onto its trend, onto the downtrend, right? So price is either going to come back to the 38.2 area, or 50% area, or 61.8 areas. So as a trader, most traders, or profitable traders, have different confluences they can use in the market to decide when they can enter in the market. One can decide to enter a sell from 38.2, or 50%, or 61.8. Let's say price stops here at 50%, then price continues to go downside to our first and hits our first and second take profit. So as a trader, I can decide to enter the market at the 38.2 retracement area, or from this area, because price actually hit the 50% retracement area. Then I can decide to place my stop loss above the 61.8, and and my take profit to be this first take profit and the second take profit indicated on the Fibonacci. One other thing I use in the market, and from what I've told you, there are three levels I'm looking at in the using while using Fibonacci: the 38.2, 50%, and 61.8. That means in case price decides, let's say in this scenario, in case price decides to go upwards and cross the 61.8, that means this is no longer a retracement, but it's one of my first indications that price might reverse. Instead of having to go upwards, and instead of having to continue downwards, it might start to show a change into an uptrend. In case it crosses my 61.8, it can show a change in momentum from a downtrend to an uptrend. So let's go to the charts real quick so that I can be able to show you easily what I mean what I mean, or what I've been able to explain using pain. So let me draw the same Fibonacci I had placed from this point in time on the daily time frame to the lower low in the daily time frame. Number one, my Fibonacci is starting from the highest point. This is a downtrend. It's starting from the highest point to my lower point, which is a lower low because it's a downtrend. Now, according to what we can say here, this is a downtrend. Everybody can be able to see this. This is actually just a downtrend, right? So price actually came down, formed its major lower lows. Then it came back and retraced back to the 50% level. Personally, as a trader, I love to take trades off the 50% Fibonacci retracement area, but I am adding different confluences into my trading to indicate to me that the 50% is actually more valid, so that I can be more confident in a trade and use it to execute on whatever setup I have in the market. Then the market retraced at the 50% area and continued downwards. It hit our first take profit according to Fibonacci. It retraced for a while, but then ended up hitting our second take profit. We can look for another area in the market so you can be able to see this more clearly. Let's go to the 4-hour time frame. I want to choose an area with an uptrend, a more clear area where you can be able to see how we can get to use the Fibonacci. Let's use this for example. This is very messy. I want to use a very clear uptrend so you can be able to see what I'm talking about. So let me use this area. Yeah, I can use this area as I'm going to use this area, this short uptrend we saw in this market in this area, and another area I'm going to be able to show you how you can use a Fibonacci properly is going to be in this area during this uptrend. So let me get started with the first area I marked out using my square here. So price was first in a downtrend, then it reached a certain level of support/resistance, and actually even formed a double bottom here. to indicate that there is more momentum to the upside. But now I'm going to just use this area here to show you how you can be able to use fibs. So first of all, price stopped at our area of support slash resistance and came up to this point. I'm using this point in time because this was the higher high that was formed. It came up to this point, our point B. So from point A to point B, I'm going to use this from point A to point B because this was the higher high that was formed. Then it traced back to a 38.2% for the fib level. So as a trader, I can decide to take a trade off the 38.2 retracement level and choose to place my take profit at the first take profit indicated by the Fibonacci retracement. So, as I explained in the previous website that I've shown you, right? Price came and retraced back at the 38.2% level here. This was our point B, and price came back and retraced. So I can decide to place a buy to our first take profit and our stop loss below the 61.8%. So I've been using Fibonacci for a while, so I know where I should place my first take profit and my stop loss. Remember, with experience, you can get better at using any indicator or tool as long as it makes sense to you. Take the trade, and the more confident or the higher the chances the setup is, the higher the chances it is that you can be able to win in the market. So let's use another area where I can be able to use a Fibonacci during an uptrend. So let's say this is our point A. There was an area of support slash resistance in this area. So this is going to be our point A, this is going to be our point B. The next, this is our low, this is our high, this is an uptrend, remember, right? So from our low to our high, this is our high, remember. So I'm going to expand this so you can be able to see it clearly. So to our point B here, right there. So our price actually came up. It formed our next high, and it retraced back to the 61.8% level and continued the uptrend to our first take profit indicated by the Fibonacci. It tried to retrace back to the 0% level here and continued to hit our second take profit indicated by the Fibonacci. So let me remove this. As a trader, according to what I see in the market, right? I can place my trade. Remember, this is an uptrend, so we are looking to buy. I can place my trade at the 61.8% level. Stop loss should be below the previous structure of support slash resistance. And my first take profit can be the first negative 27% indicated by the Fibonacci. That's already it. We're already going to make 2% off this trade. How you're able to see the 2%? Just look at this value here, the 1.93. It's close to a 1 to 2 risk reward ratio. By 1 to 2, I mean you're risking 1% to make 2% of what you have on your trade. Now, my second take profit indicated by the Fibonacci is going to be this next light green line, where I'm going to make 2.7. I'm going to risk 1% to make 2.7% on my trade. Look at this chart and make sure it makes sense to you. When I do my Fibonacci, this was my point A, where I started, where I saw the uptrend actually getting started. Then I placed my Fibonacci at the second point B, during the uptrend at the next high, so that I could be able to see a retracement in the market, so that I can be able to take a trade at either the 61.8 or 50%. And my stop loss, I give space to all my stop losses so that price can do whatever it wants. But when it's time for it to get more momentum in the market, then or when it's time for the buyers to come into the market, my trade will just go into profit, to my first take profit, then to my second take profit. So I'm going to show you a simple example on this second area. I'm going to make this real quick. As long as you've understood what I've told you about in these few minutes, you're going to be able to understand what I'm going to just show you here with very little explanation. So we have a small area of support slash resistance being formed here. In case you don't know support or resistance or psychological levels, just check in one of my previous videos. I'll put it in at the end of the video so you can easily be able to click it and get to see what I'm talking about. So I'm going to place my Fibonacci from point A to point B. That's the next high right here. Now, from what I've told you in the previous in the from what I've told you in the previous minutes, you can be able to understand just by seeing this. It's literally so simple. Number one, I'm very good at using Fibonacci because I've used it for a while in my trading and it has helped me win a lot of trades and increase my percentage win on most of the trades I take. It actually increased my winning percentage by 25%. I attribute to Fibonacci, but I've started to use it less and less because looking at charts on a daily basis makes you get used to seeing where a particular trade is actually going to stop, or it makes you notice the 50% retracement, or that 8.261.8 retracement on your Fibonacci levels. So it's easier for me to actually see them with my naked eye. But in case I need to be more visual on my charts, I can just place it there to see where I'm going to place my second take profit, or where I'm going to place my take profit. So according to this chart, I'll place my Fibonacci from point A to point B, and I'm going to place a buy at 50% retracement area, and I can place my stop loss below 61.8, or let me place it below this structure. Yeah, below this structure. I'd rather give space to my trades, but usually below I place it below this area where price actually started to be rejected. But for the sake of this video, to show people that you have to give space for your stop losses. With experience, you get to decide where you can place your stop loss easily, where it's not easily hit, and you can easily make money out of it. So I'm going to place my take profit at this point, at the second take profit indicated by the Fibonacci. This makes so much sense. Number one, the second take profit makes even so much sense because when you look at the left area, we can see that price was actually being rejected. It was first rejected here, rejected here, rejected here. So when I place my Fibonacci, it actually made sense that our second take profit was actually in this area of resistance. So this is quite simple. This is what they call price action. And the more you get to use these tools that I've been able to explain to you in these previous videos, like the Fibonacci support and resistance, the types of momentums in the markets, and how to confirm retests, combine all of this, and with time, trading is going to be more easier for you. It's nothing complicated. Just keep it simple, and trust me, within no time you'll be able to see results. Well, I'm going to as I told you in the beginning of the video, I'm going to place a link to a video that describes how is the Fibonacci was inverted and how you can be able to see it on a day-to-day basis. It's going to make more sense. It's very simple, guys. And like and subscribe this video, share, and let's all become profitable traders.